markets. All right, kind of teased it. Oliver Slopes with Blue Line Futures. And Oliver, I guess the commitment of traders report, I think, is something that you tagged earlier this morning. How does that factor into everything that's happening?
Well, we always like to keep an eye on what managed money is doing, and as of late, that has been covering some short positions. Now, the upside on the back of that short covering has been somewhat limited due to the farmers selling, so that has offset some of it, but the trend has been short covering, and that has provided a nice tailwind to prices as we've gotten out above some big technical levels, particularly for corn and soybeans, a 20-day moving average, as well as trendline resistance levels. Whether or not that momentum continues to be determined now that the funds have covered a large portion of their large net short position. They have some powder to add. So if we're not able to get any sustained momentum from these levels, potentially they step back in as the combines start to pick up. And harvest gets going through the Midwest. We do have a USDA report this week, so maybe that's going to be something that could potentially change the narrative to be a little bit more optimistic longer term. But as far as the money flow goes, the funds is still in control here.
What about sales of soybeans? Another sale reported to China. That's got to be positive news.
I tell you what, it is a breath of fresh air to see some demand for the soybean market. And really, this goes back over the last 4 or 5 weeks. Even the new crop weekly export sales report has come in above expectations for each of the last 4 or 5 weeks. We got a string of flash sales last week and another one here to start this week's trade. So we are starting to see demand pick up, and it's from that all-important buyer, China. So hopefully we can continue to see those numbers continue to roll in and at bigger numbers. That would certainly be beneficial to the soybean market. As you'd mentioned, soybeans really kind of the outperformer to the upside to start the week, but we're still, lingering in a little bit of a range, call it $10 to $10.25. If we break out or break down on either side of that, I think that could be the potential catalyst to spark another technical move.
Okay, Oliver, hold on. Hold your breath. We'll be right back. We're going to talk livestock futures. Oliver Slope Market Day Report continues in a moment. 15 off 35. Well, Oliver Slope, Blue Line Futures. And Oliver, I was joking in the break there that every time I introduce you, it makes me think of hockey and hockey season coming around. But really, I'm going to tie this back into the livestock markets. They've been cold as ice, just trying to find something to skate on, especially with the hog market.
That was pretty good. I was wondering where you're going with that. But, yeah, they have been really cold. The path of least resistance has been lower in the cattle complex. I wouldn't be surprised to see that continue. At the end of last week, what we really saw was a buyer strike and no one really willing to step in front of those headlines that we got midweek with regards to the anthrax spread. And there's been a continuation of these lingering concerns, whether it be the economy, the election, and now anthrax, even bird flu prior to that has kept the buyers at bay. Potentially we get to a point where low prices cure low prices, but right now I'm not sure that we're at that point yet. I wouldn't be surprised to see us test those lows from just last month, as well as those lows from last December, which are still about $2 to $3 lower in some of these contracts.
I was looking at the beef trends report from U.S. Foods, looking at the grinds, and they're expecting ground chuck to decline through the remainder of the year. Blue Line Futures. And Oliver, I was joking in the break there that every time I introduce you, it makes me think of hockey and hockey season coming around. But really, I'm going to tie this back into the livestock markets. They've been cold as ice, just trying to find something to skate on, especially with the hog market.
That was pretty good. I was wondering where you're going with that. But, yeah, they have been really cold. The path of least resistance has been lower in the cattle complex. I wouldn't be surprised to see that continue. At the end of last week, what we really saw was a buyer strike and no one really willing to step in front of those headlines that we got midweek with regards to the anthrax spread. And there's been a continuation of these lingering concerns, whether it be the economy, the election, and now anthrax, even bird flu prior to that that has kept the buyers at bay. Potentially, we get to a point where low prices cure low prices, but right now, I'm not sure that we're at that point yet. I wouldn't be surprised to see us test those lows from just last month, as well as those lows from last December, which are still about $2 to $3 lower in some of these contracts. I
was looking at the beef trends report from U.S. Foods, looking at the grinds, and they're expecting ground chuck to decline through the remainder of the year. The 81.19 expected to decline through the fourth quarter, and the same thing for 73.27 on the ground beef side. So I guess what they're telling us is the demand is starting to lighten up a bit. The demand is starting to lighten up a little bit, and that's kind of what we've been worried about, is the slower economic data that we've seen over the last couple months continuing to trickle down to the consumer, and it seems like slowly but surely that's starting to have a little bit more of an impact. And after all, this is a futures market, and that seems to be what the futures prices are indicating, that we could continue to see this demand soften up as those economic data points come in below expectations. Not even just those headline numbers, but the months prior, they keep getting revised lower as well. Okay. Oliver, thanks for spending some time with us. Oliver Slope, Blue Line Futures.